We're going to talk about a couple of interesting aggressive growth stocks now with our aggressive growth stock strategist, Brian Bolan. This is the last time this year that you're going to be doing the Zacks Rank Buy in the aggressive growth category, only because it's coming up to the end of the year and a lot of people are going to be away from here and people are going to be enjoying the holidays.
Enjoying themselves, and that would be great. And I figured I would do something a little bit special.
I see that, yeah.
Go a little bit deeper into how I look at an aggressive growth stock.
Yeah, you've got a value add.
Yeah, little value add today, and a little comparison, comparison shopping, if you will.
Okay, so Wyndham is the first company you're going to talk about.
Right, and some people like to call Wyndham the breezy pig.
Oh.
Wind and ham.
Oh.
But, other people just know it as the hotelier that, has got a ton of brands. So
sure, it's maybe just you who likes to call it that.
It probably is just me. It was my special nickname, the breezy pig.
I thought so.
But, the big idea here, it's a number one ranked stock, and it has been for quite a while. It has a great record for earnings history, 28 consecutive beats. We're talking there like 7 years. So this stock, at least the management, understands the market to the point where they can guide the Wall Street analysts to a certain level and then beat it every single quarter. Mm-hmm. So that's a very rare achievement that you're going to see a 7-year beat, a 7-year span. I think even Herbalife, is like 5 years, and there was Ulta recently just missed its streak, and that was like 5 years as well. So 7's pretty huge. The other idea here with Wyndham is that there's a bunch of brands out there. It's Ramada, it's Days Inn, Super 8, all of those last few places I've stayed. I've never stayed at a Howard Johnson, though.
The people who, they don't specialize in motels. They specialize in making buildings with orange roofs.
Orange roofs, okay.
Right.
Well, either way, the industry rank for the hotel group has really been improving. The other number one in the hotel group is a hotel chain in China. And I'm not so fond of Chinese stocks at the moment, just because you don't really know what's going on. You really got to take hold your nose and take a deep dive into that one and see if it works or not, because you can't trust their audits.
That's what I hear.
If we take a look at the chart here for Wyndham, it's moving up nicely, but I think you're gonna get some good strength coming down the road. So now here is my my value add piece. We're going to talk about a little bit of a valuation look between Wyndham and a competitor, Starwood Hotels.
Okay.
Starwood is the W and a bunch of those newer, sexier properties. Those types of hotels that are not budget focused, if you will. Mm-hmm. Wyndham is obviously the highest end of the value brand for their line. Okay. If we take a look at just how we look at valuations here, we can see that the industry line is the second one there. So WYN is for Wyndham there. Then the industry averages, and then the hot is Starwood Hotels. You can see Starwood has a much higher valuation. When we take a look, obviously, you look at trailing earnings, the price to earnings ratio, looking trailing, but that's just kind of a thing of how has it done over the past. Mm-hmm. But you're really much more concerned with how do you expect it to go in the future? What is it selling for going 12 months forward? So your forward earnings is much more important than your trailing earnings. I don't look so much at price to free cash flow. That's more of a metric that people want to look at, for cash flows, that sort of thing. Mm-hmm. Here at Zacks, we're much more focused on earnings. So, the PE is going to be something we're going to, key in a little bit more on. The price to book is a very interesting comparison here. Both Wyndham and Starwood Hotels are trading above the price to book average for the industry, and that suggests that their properties are worth more than the other companies that are in the same group. Having a premium valuation on price to book is a good thing, because if they need to sell off their assets, it is the idea that they could get probably a better price for them if they are, having a higher price to book. Okay. The last thing I'll show here on Wyndham is just how the earnings estimate for 2014 have looked over the course of this year. And as you can see for Wyndham, it has moved up nice and steadily starting at $3.90 and ending the year at $4.37. So good growth has been expected for next year, the entire year of 2013. So look for more of that, and this makes it one of the reasons why I really like this stock as an aggressive growth pick.
Okay. I'm just making a note here about that Howard Johnson remark because I'm sure to get some mail on that somewhere down the line. Kirkland's. Talk about Kirkland's.
Right. Kirkland's is home decor. And what is home decor? It's those knickknacks, paddywhacks, those sorts of things that you're going to have around your house, maybe a little small column or wreath or vases, things like that. That it's indoor and outdoor. So it's not just paintings or furniture, that sort of stuff. It's more of that stuff that you're going to put in your credenza, maybe.
Accessories.
Accessories, exactly, Terry.
There you go.
Thank you for helping me out there.
Sure.
It's a number 1 rank, and it has 5 consecutive beats. Not quite like Wyndham, where it has 28. But 5 is still pretty reasonable. You've beaten everything this year and 1 extra quarter, so that's still pretty good.
Sure.
315 stores in 35 states, which is good spread, good coverage across the United States, and it's a Zacks rank 1 right now. We can see just from the chart here that the stock has recently popped due to good earnings. When I take a look at the valuation here, I'm going to compare this one against RH, which is Restoration Hardware.
Yeah. I've been in one of those stores.
You've been in a Restoration Hardware?
Yeah, a lot of stuff in those places.
Yeah, and very expensive too, right?
Well, sometimes. It just depends on what you're looking at.
Yeah, everything to me is expensive, though.
Okay,
but, if
I can't help you there.
If it's not the price of a newspaper, I'm not buying it.
Right, okay.
But Restoration Hardware trade at a very high multiple. If we look at the chart here, we can see a forward PE of 85 times for RH and 25.4 times for Kirkland's. And they're not necessarily the exact same type of thing, but they're pretty close. Restoration Hardware is that luxury brand, whereas Kirkland's is kind of that, I don't want to say discount, but it's certainly not Restoration Hardware. It's not up in that upper echelon of pricing. With that upper echelon, that luxury set brand, you're going to get a little bit higher multiple, but I think obviously the multiples for Restoration Hardware have gotten a little bit out of control. So this is kind of not as good as a comparison as Starwood to Wyndham, but it's it's got such a disparity here that it makes you say, why is this one a number 1 and this is a number 3? Then we take a look at the earnings. You see for this group, there's been some ups and downs with the earnings. So it starts at $1.03, it trails down to 93 cents, and then heads back up, and now we're at $1.17. And that's the big reason why this stock is a Zacks rank number 1, because it moves from $1.03 recently to $1.17. Percentage-wise, it's a gigantic increase for earnings estimates. But you can see that there is a little bit of an inconsistency throughout the year for Kirkland's. So you're going to have to take the good with the bad with this one. It's a better valuation, obviously, than Restoration Hardware, but it is showing good growth.
Okay. Thank you for going the extra mile on those 2 companies. We certainly appreciate that. Do you own either of the 4 that you rattled off?
I do not.
Okay. Check out other stock picks on our website, Zacks.com. They're always there for your review. And check back often because they change often. With Brian, I'm Terry Ruffalo.